Hey everyone, this is Trader AG and welcome to another episode of the Public Update. Today I'm going to be talking you through what we are seeing on the chart just before the Fed interest rate decision. This will be a major decision obviously, and I think we will have some volatility in the market. So today in this video I will be giving you a great plan that you can execute so that when the volatility comes in and the price decides to push to either side, you have a great plan in your hand and you're not stressed, you're not looking for bad trades on the chart. Now, first things first, I have to run you through what happened since I made that last video last week, because if you understand what happened last week, you will have a great understanding of what you should look out for this week as well, because believe me, they are extremely correlated. Now, last week when I made the public update, we were here on the chart, we were making this range and we were just about to break out from this range, and after the video we broke out on Thursday night, and you can see here that we had a great push above the weekly level, and I told you that if you want to take a short position on the market, you should be waiting until we are back inside the range, right? So this is something I keep telling you all the time, and it's the case on this one as well. You can see that the price went above the range high and then did not come back inside this range until Sunday night. So this is really crucial to understand, right? During this period when we are making these pushes above the range, you're not supposed to take short positions in the market because it's really risky, especially if you're just trading this range. Obviously, you might have different plans in your hand, but specifically for this range, when we see a breakout of the range, you shouldn't be trading outside of it. You should wait until we are actually getting back inside it, because that's when you are seeing a failed auction in the market. Now, what I'm going to do here is I'm going to explain to you what happened on this chart here, because if you understand what was the trigger for you to enter a short position that you could have taken back to the middle of the channel, it's the exact same thing that you should be looking out for now, before the meeting or after the meeting on the chart as well. So if we go back to the XR charts here and look at what happened on the chart during that push up, you can see here that when we were pushing up to $98,000, we have seen a great decrease in open interest on the chart. If I just zoom in on this one here, you'll see as well that the open interest was falling down pretty strongly here, and this showed that the move up to $98,000 was actually stopping out a lot of people on the chart. So people who were shorting the market were getting stopped out because that's where their stop loss were. And at this point, you did not have a position, or you did not have an entry trigger at this point. When you had the entry trigger was when you actually lost the weekly level on the chart. That was the line in the sand. I will give you the same level, not the same level, but a different level that you can use just like that same concept. And you can see, if I go back on TradingView, the level sits at 96,262, right? So right here. So this price action here is a bullish price action because you're seeing the price push above the range high, and until it's lost, there is no weakness on the chart. So again, go back on XO charts here, you see that 97,260 is lost when we have this candle right here. So before this is a bullish price action because you're seeing that the price is testing the level and having a reaction. Testing the level, having a reaction, and then now we break the level. And you don't even have to short the market when you break the level here. What you can look for here, if you have XO charts in your hand, again, if you don't, you're more than welcome to join Tag Team. We have a whole series covering how to use this platform and how to read order flow. Back to the thing now. So here you can see that after we lost the level, you can see that the longs coming in on the chart here. All those blue lines here show you price levels where longs are more concentrated than shorts. So here you can see longs coming in here, longs coming in here, longs here, and you can see the open interest is increasing during this push as well. So you see $7.9 million of added open interest in the chart, 11.8 million, 5.9 million, 4.3 million. And if you just zoom in on here, you can see that these are longs coming into the market as well. So if you see these longs coming in after we saw a failed auction above a level that I deemed as important, what you now can say that is, we have people who tried to push the price above a certain level, then the level was lost, and now people are longing into resistance. So now you had a great short potential here on the chart, because this is when you actually lost the level that we talked about. So if you were to take this trade, this is how you could have taken it, right? So here you could have taken this level here, had your stop loss above the high, with your target at range low with your take profit one at the middle of the channel. So this would have given you a win of 1.66 restored ratio trade. And now why this is so crucial is this will be the same thing that we will talk about for what will be happening in the chart next as well. Now, if I go back to the original price now, actually I'm going to go here, it will be easier. You can see that just like that range, we have another range on the chart right now as well. So you can see here that this is the range that we have on Bitcoin right now with a clear NPOC level below the major support. And you can see a clear resistance level above the range high. So this is my current range on the chart. And the thing that I will be looking for will be the same thing that I looked for last week on that weekly level as well. So if the price during the meeting, after the meeting, maybe on Thursday, Friday, doesn't matter. If the price is able to push above these zones right here and hit that day level, this is not the time to short the market yet, because this just shows you that the market is actually pushing above the range that you have on the market. But when this becomes a weakness is when you actually start losing that level. If you are losing this range high, or again, this will be a volatile day, so it could be in a different way as well. So the price could push up higher here, but when you see this daily and the daily MPOC level being lost on the chart, this is when you can actually have a trigger in the market to have a short position. The plan I gave you last week was perfect, and you could have executed it if you had alerts on the chart. So please, this week, have your alerts on the chart, because this is a really, really good plan on the chart. I don't want to give you predictions on the market because I don't know where the price will go, but I can give you great high probability scenarios on the chart that could happen. And if it happens, you should not be stressed out. If the price pushes up above $98,000, you should not be looking for long positions. You should look for a price to hit these levels and then lose this range high, or if it's really volatile, for a price to push higher and then lose this daily plus daily MPOC zone, which gives you a great short position in the market like this. I don't know where the high will come in, maybe here, it's hard, yes, but and then your target should be the range low, and your take profit one should be at the middle of the channel right here. So extremely simple plan, right? Just like last week, when you have a great plan in your hand, you can actually execute it, and then you don't get stressed out in the market as well. So this is the plan that you should look out for in the market. And is there a chance that the price just pushes up higher to $100,000 here? Yes, of course. That's why you should wait until you have signs of confirmation in the market as well. What are those signs? Well, number one sign in the market is obviously a 1 minute or 2 minute market structure shift. So you want the price to actually hit a level and have a reaction on the chart. And then you're looking for divergences on the chart, CVD divergences, and then you're looking for a key level to be lost. So in this case here, what you should be looking out for here is after hitting this level here, you're looking for a price to change the market structure here, have divergences on the chart, CVD divergences, and then lose this range high, which gets you in a short position right here. So you're not shorting the market at the highs here, you're shorting the weakness on the chart. So I hope that is clear for you. If the price decides to push higher, you can be sidelined, don't have to short the market. If the price decides to reject from this zone right here, and let's say we have a bearish news on the market and the price decides to go down, and let's say we do this, what I'm looking for on the chart here is I'm not looking to have any long positions on the market until these lows are cleared, because these lows right here are the main lows on this zone right here that have the most liquidity in the market. Everyone was waiting for these lows right now, and we actually front run that level. We had this the Monday low here that we put in, and again, hopefully you were following me on Twitter. I gave you a great plan to execute on Tuesday as well. I told you that just look out for the manipulation of this high and this low, and we had them both, which was pretty cool. So again, same thing here as well. If you see the price manipulate the highs, great, you can have a short position. If you see the price manipulate the lows, great, you can potentially have a long position right here. So it doesn't matter where the price will go. As long as you have a plan, you'll be good, because if this happens rather than that, then you can have a long position like so in the market. Obviously, this is a lot easier for me than it is for you, because possibly that you're not that into range trading, but hopefully as time goes, as you watch these videos more and more, you'll have a great understanding of what I'm looking for in the chart as well. And obviously, if you want to have my live updates, if you want to see me trade these levels, if you want to actually have my live reactions as these things happen, you can always join the tag team. Last night, we were hitting a major level on the chart, right? We were hitting a weekly MPOC level that was sitting at 96,200. So the level was right here. And I told my team that you should be looking out for this level. And just like this video, I was telling people that you should be looking out for this level. And the reason I was telling that was because if you see a push like this, this will be the number one zone that you can have a rejection on the chart. But the biggest difference between me and other traders in the market who don't have order flow in their hands is I will be waiting for a certain reaction on the chart before getting into the market. So if you were in the tag team, if you were in our Discord channel, you would see here that I did not take this short position. And here I was running the people through what I'm doing here. You can see that I was telling people that we had a daily level here, we had this weekly MPOC level. Now tapped, it's a valid short if we see the loss of 96.2 here. Right, so here as well, going to sleep, guys, getting too late here. Look for local market structure shift as the first sign, CVD divergences as your second sign, and the loss of 96.2 as the third sign. That's the best opportunity for today, tomorrow. See you guys tomorrow. So again, so crucial to have this kind of support system in your hand as well, because if you just look at this level and if you just short the touch of this level, obviously you will be in a bad position. But if you're waiting until you have a confirmation in the market, then you will always have a great stop loss, great target, and you will have a high probability trade in the market as well. So in this case, you can see here, price pushed up, went down, tested that 96.2 level, didn't lose it, and then have this reaction right now. So that's why I didn't take the short. And if you want these kind of updates, I'm always on the Discord. You know, we have a great community on there, and also we have a great trading educational series as well. If I could just go on the Safari here, you will see that this is the educational content on Tag Team. We have the range trading series, we have the ExoChart series, we have the tools and indicators that I love to use, and also the risk management and psychology section on the chart as well. So hopefully, if you're interested in these things, you can always join, learn about these things, and join a community that is pretty good, to say the least. So now back to this chart right now, and I'm going to run you through one more thing before I leave you, which is Ethereum on the chart as well, because I think a lot of people are looking to long or short this market or for this coin right here. And for me, it's a pretty simple plan. So we had this local zone of resistance right here on the chart, but unfortunately we actually front run that level, which kind of sucked because I was looking for a short position right here. But now I'm going to delete this level, and the main zone that I'm interested on Ethereum comes in above this high right here. So just like Bitcoin, I will be waiting for price to push above this zone right here and hit this daily MPOC, the daily zone, and then have a certain reaction on the chart for me to enter a short position. So if the price comes up after the Fed meeting, hits these levels, and then I see the market structure shift, I see divergences on the chart, this becomes a really good short position in the market as well. So if I go on here and go on the short position, this would be another short that I would be willing to take if I see signs of weakness after hitting that level. So if you want to know what these signs of weaknesses are or how they look on order flow, I can actually show you what has happened on Ethereum today as well, so you can understand what I am talking about. So if I go on here, you will be able to see the exact signs I'm talking about here. So what I'm looking for on the chart when I'm looking for a short position is I'm looking for this open interest to increase. So on this case here, you can see the open interest was decreasing. So for me, this would not have been a valid short trade in the market. But another sign that is really crucial would have been this right here. So here you can see that CVD is making a higher high while price is making a lower high on the chart. So that's your number one sign that there is absorption in the market. But unfortunately for this one, we did not have increasing open interest. The market was actually in a dying condition right here. So what I'm looking for when we hit those major levels on the chart is for the open interest to increase, for longs coming on the market, for divergences to form, and then loss of a key level on the chart. So hopefully I made my point clear. If you like these videos, please leave a like. I like to see your support. And if you want more, if you want live updates, if you want to see me go through this price action every single day, you're more than allowed to join the tag team. We have a great community. We have a great education there. And yeah, I will see you on Twitter, tag team, or on my next video. Bye-bye.